How to turn $10,000 into millions, the Warren Buffett way. Introduction. Investing is simple, but not easy. Most people overcomplicate investing. They chase the latest stock tip, check prices every hour, or panic whenever headlines turn gloomy. Yet Warren Buffett, the most successful investor of all time, says building wealth is far simpler than most imagine. In a famous talk, Buffett shared a story from his childhood that perfectly explains how anyone could have turned $10,000 into $51 million simply by trusting America's growth and staying invested. This is not just history. It's the timeless blueprint of long-term investing. This guide distills that wisdom into an actionable roadmap for you. Whether you're just starting or looking to reinforce your investment discipline, these lessons will reshape how you see wealth creation. The story begins March 12, 1942. Imagine the world in early 1942. The United States had just entered World War II, and things were going badly. Newspaper headlines screamed of defeats in the Pacific. The Philippines were on the verge of falling. Fear dominated every conversation. That's when a teenage Warren Buffett made his first investment, 3 shares of Citi's Service preferred stock. The price had fallen from $84 to $40 per share. The next day, it dropped even more. Buffett watched his small savings shrink while sitting in school. Eventually, the stock rebounded and went over $200, but Buffett had already sold, pocketing a small profit. That early experience taught him something profound. Short-term fear and excitement destroy long-term gains. Lesson 1. Don't let headlines decide your future. The first and perhaps most important takeaway from Buffett's 1942 story is emotional discipline. You can't really fail at investing unless you buy the wrong stock or just get excited at the wrong time. Every generation faces scary headlines: wars, recessions, elections, pandemics. But if you react to fear instead of fundamentals, you'll sell too early, buy too late, and miss the compounding magic that creates real wealth. In Buffett's words, we knew America was going to win the war. Even when things looked darkest, the long-term direction of progress never changed. The same is true today. Actionable insight. Before investing, ask, am I reacting to today's news or trusting a long-term trend? If I owned this investment and there were no headlines for 5 years, would I still be confident? If the answer is yes, you're thinking like Buffett. Lesson 2. Own a slice of productive America. Buffett's key question to investors is simple. How is American business going to do over your investing lifetime? The logic is powerful. Every time you buy a stock or index fund, you're buying a small piece of American business. The factories, the software, the services that power the economy. Had you invested $10,000 in 1942 in an S&P 500 type index fund and never touched it, you would have $51 million today, without trading, without timing, without insider tips. That's the compounding miracle. Dividends get reinvested, profits fuel innovation, innovation drives new profits. Buffett calls this the American tailwind, a constant force pushing wealth creators forward. Actionable insight. Prefer productive assets, businesses, stocks, real estate, over non-productive assets, gold, collectibles, or idle cash. Remember, productive assets grow. Non-productive assets only sit there. Lesson 4. The time in the market beats timing the market.
Buffett's early sale of his city service shares is a timeless example of why patience matters more than precision. He sold because the stock had dipped, then rebounded slightly. The classic emotional roller coaster every investor rides. If he had simply held on, his 3 shares would have multiplied exponentially. The power of compounding. Albert Einstein called compounding the 8th wonder of the world. Buffett lives by it. $10,000 in 1942 to $51 million in 2025. That's about 10.3% annual growth over 83 years. The lesson is, you don't need to trade daily. You just need to stay invested consistently and long enough for compounding to work. Actionable insight. Ignore daily price swings, reinvest dividends automatically, measure success in decades, not days. Buffett himself arranged for 90% of his estate for his wife to be invested in a simple S&P 500 index fund. That's how strongly he believes in it. Lesson 6. Ignore the noise, stick to your philosophy. Every era has prophets of doom. They predict crashes, bubbles, or the end of capitalism. Buffett's advice: tune them out. You'll get that constantly throughout your life. But if you owned a cross-section of America and put your money in consistently, there's no comparison. Fear sells, but patience builds wealth. Buffett famously says he has no idea where markets will go next month or year, and it doesn't matter. What matters is understanding why you're investing and staying true to that plan through thick and thin. Actionable insight. Avoid 24/7 financial news. Don't check your portfolio every day. Write down your investment philosophy and revisit it annually. Lesson 7. Investing is not a game of IQ. Buffett emphasizes that successful investing isn't about intelligence, predictions, or complex formulas. You don't have to know what the Fed is going to do next. None of that counts at all, really, in a lifetime of investing. What counts is temperament, the ability to stay calm while others panic. Even highly educated investors fail because they overthink, overtrade, and overreact. Buffett calls it a very relaxed philosophy. The best investors have emotional stability, not just financial knowledge. Actionable insight. Develop self-control, not secret formulas. Base decisions on data, not emotion. Remember, volatility is not risk. Panic is.
Lesson 8. Consistency beats brilliance. If you'd followed Buffett's approach, investing small amounts regularly into the market, you'd outperform most professionals. He even jokes, if you'd followed my advice, your friendly stockbroker would have starved to death. That's because constant trading generates commissions and taxes, but rarely better results. A slow, steady, consistent plan, buying broad index funds monthly, quietly beats 90% of the flashy strategies. Actionable insight. Set up automatic investing from your paycheck. Rebalance annually, not weekly. Ignore hot stock conversations. Lesson 9. The American Tailwind. Buffett calls America an investor's haven. Despite wars, recessions, inflation, and political turmoil, U.S. business has always adapted and thrived. Innovation, from steel to software, from railroads to robotics, has created unmatched long-term prosperity. The American system rewards entrepreneurship, reinvestment, and productivity, and those are exactly the engines that grow your investments. We have operated in this country with the greatest tailwind at our back that you can imagine. Actionable insight. Bet on progress, not pessimism. Believe in the long-term strength of innovation. Diversify globally, but never underestimate America's compounding power. Lesson 10. Simplicity, discipline, and perspective.
If Buffett could summarize his philosophy in one sentence, it would be this: have a philosophy that you understand, stick with it, and forget about doing things you don't know how to do. In other words, invest only in what makes sense to you. Keep your circle of competence small, stay consistent, and don't be swayed by complexity or hype. Practical Buffett checklist. Invest in broad, low-cost index funds. Hold for decades, not months. Reinvest dividends. Avoid high-fee advisors and constant trading. Ignore daily headlines. Trust the long-term growth of business and innovation. How to apply Buffett's wisdom today. Let's translate Buffett's timeless principles into a modern step-by-step guide for individual investors. Step 1. Build an emergency fund. Before investing, ensure you have 3 to 6 months of living expenses saved. This keeps you from selling investments during emergencies. Step 2. Pay off high-interest debt. Credit card or personal loan interest often exceeds 15%. Paying it off is a guaranteed return. Step 3. Invest consistently. Start monthly automatic investments, even small amounts. Compounding works only when time and consistency align. Step 4. Choose low-cost index funds. Examples: S&P 500 Index, VOO, FXAIX, or IVV. Total Stock Market Index, VTI, or FSKAX. International Index, VXUS, for global diversification. Step 5. Stay the course. When markets crash, as they inevitably will, do nothing. Keep investing. Remember 1942, panic never pays. Step 6. Reinvest dividends. Dividends are the hidden engine of compounding. Reinvest automatically to accelerate growth. Step 7. Review once a year. Rebalance only annually to maintain your target asset allocation. Spend more time earning money, not checking markets. The math behind $10,000 to $51 million. To visualize Buffett's claim, let's look at the math. Year, investment, value, 10.3 CAGR, notes. 1942, $10,000, $10,000, starting point. 1952, $10,000, $26,820, post-war boom. 1972, $10,000, $188,000, industrial growth. 1992, $10,000, $1.5 million, tech era begins. 2012, $10,000, $12.1 million, global expansion. 2025, $10,000, $51 million, 83 years of compounding. Source: based on S&P 500 historical total returns, including dividends. This is why Buffett says you wouldn't have to do anything. Time did the work. The emotional side of wealth. Buffett often says investing is 80% psychology and 20% math. Most investors fail not because of poor analysis, but because they lack emotional resilience. When the market falls, fear whispers, sell before it gets worse. When the market rises, greed shouts, buy more before it's too late. The antidote is perspective. Every crash in history has been followed by recovery and new highs. Those who held on and kept buying always came out ahead. Actionable insight. Treat downturns as sales, not disasters. Remember your time horizon, decades, not days. Stay humble. Nobody knows short-term market moves. The legacy of Buffett's philosophy. Buffett's approach isn't just about money. It's about trust. Trust in progress, in innovation, and in humanity's drive to solve problems. The investor who holds a cross-section of businesses is betting on people, engineers, scientists, farmers, entrepreneurs who wake up every day trying to make life better. That's why long-term investing works. It's not gambling on price, it's ownership in productivity. If America does well, American business will do well, and you will do well too. The Buffett Blueprint for Lifelong Investors. Principle, meaning how to apply. Think long-term. Time is your greatest ally. Hold for decades. Own productive assets. Businesses grow, gold doesn't. Buy stocks, not speculation. Avoid noise. Headlines mislead investors. Focus on fundamentals. Stay consistent. Regular investing beats perfect timing. Automate contributions. Keep costs low. Fees erode compounding. Choose index funds under 0.1% expense ratio. Reinvest dividends. Income reinvested equals exponential growth. Enable auto reinvestment. Have faith in progress. Humanity advances despite setbacks. Bet on innovation. 17. Beyond wealth, the mindset of financial freedom. Buffett's wisdom goes beyond returns. The true goal of investing is freedom. Freedom from worry, from dependence, from short-term noise. A disciplined investor sleeps well at night because she knows time, not timing, is on her side. When you align your money with long-term growth and remove emotion from decision-making, you gain more than wealth. You gain peace of mind. Final thoughts. Your $10,000 moment. Every investor faces a moment like Buffett did in 1942, when fear screams louder than reason. That's when millionaires are quietly made. You don't need brilliance, perfect timing, or Wall Street connections. You just need conviction, the faith to invest in productive assets, patience to hold them through storms, and discipline to stay the course. Warren Buffett turned a teenage lesson into a philosophy that built one of the world's greatest fortunes. You can apply the same principles today, starting with whatever you have, even $10,000 or less. Time, discipline, and belief in progress will do the rest. Quick summary of Buffett's $10,000 to millions formula. Start early. Time is the real multiplier. Own businesses. Buy productive assets, not shiny objects. Stay invested. Don't trade or time the market. Ignore the noise. Headlines fade, growth endures. Reinvest dividends. Let compounding work its magic. Keep it simple. Low-cost index funds outperform complexity. Trust the American tailwind. Progress is your partner. Conclusion. The easiest hard thing you'll ever do. Warren Buffett's 1942 story isn't about luck or genius. It's about the power of patience. He took a simple truth, that productive businesses grow over time, and made it the foundation of an empire. You can do the same. Start small, invest regularly, hold forever. And one day, like Buffett, you'll look back and realize that wealth was never about timing the market, it was about trusting the process. Author's note. This guide was inspired by Warren Buffett's talk, How to Turn $10,000 into Millions. His story is proof that ordinary people can achieve extraordinary results, not through speculation, but through steady belief in progress and the compounding power of time.